Welcome to another video by Dale Wheatley, founder at theoptionshunter.com. Subscribe to our channel at the end of this video, and let's start your journey to financial freedom.
Friday, May 23rd, 5:20 in the afternoon. So I tried to do the recording before, it didn't have any sound, so I'll try again. So anyway, yesterday had a little bit of a pattern. It's not too much, but a little bit of a pattern on the 3-minute and 5-minute charts on volatility, where the price was lower and the technicals were higher. So that led to a market that had fear in it this morning. So didn't have anything to do with what people think. If people's talking about whatever Trump's doing and stuff like that, that's not what's going on. See, we're just looking for a pattern. See, and whatever the reason is uh, insignificant. It's just that it has a pattern that says it's going to move volatility. And when it says it's going to move volatility, we just look and see if the reverse is true on the markets. And I don't know, you can tell me. Price was higher, technicals lower. Same thing here. The price is lower, technicals are higher than the reverse. See? So that led to a market that moved down, of course, if you wanted to take advantage of it. You could have done so. $5.73 early on. Yeah, so about 9 cents on the 573 puts, and they moved up to $1.23. So that's over 1,000% in the first couple minutes of the day. And then wash your hands clean of it, and you're done with the market trading for the day. See what I mean? Only have to do one trade in any given day. You don't do one every day. You make 1,000%. And you got $1,000 in it. You already made $15,000 just like that. So you don't have to trade all the time. People are seemingly oblivious to the fact that that you don't have to trade all the time when you're trading this kind of thing. You know, the magnitude of these returns is just astronomical compared to every other thing, you know. So if you're looking at some other thing, it pays you 15% or 10% of the day. Okay, well, I guess that's good, but it's not 1,500%, that's for sure. So what would you rather have? It's all about percentages. So who makes the best percentage, and what's the easiest one to locate? So that's what we do here. We try to find the ones that make it easy to locate. So like later on the day, a little bit after 2 o'clock, you had the 3-minute chart. See, with the V-shaped bottom, that's what I look for. See, price same low or lower. Lower could have been down here, as long as this was up here. See, technical's higher. See, doesn't even touch the line. See? So that was the volatility showing that it would advance again. So if the markets have a reverse pattern at 2 o'clock, well, I didn't really see anything clear, at least on this part of it here. I see the market starting to drop on the 5-minute. Let's see on the 3-minute chart. See, maybe. Yeah, okay. It's kind of the same thing. It's all kind of a pattern. Then it goes wishy-washy like the. It still has some kind of a pattern. So along with volatility increasing, so that's what we're really looking for. So, even though you have to stare at it, what, uh, the ingredients for a big move. So let's see here. Oh, 80, I don't know. Kind of expensive there, but anyway, let's see. At 3 o'clock, two ten, they were 3 cents, and then by the end of the day, they moved up to $1, like that. So that's 3 or 4 times your money on it. Expensive. And so late in the day, and the 580 puts, so you're kind of reaching for something there. These right here were maybe 10 cents on the 578 puts at 10 cents, and they went to 43 cents. So that's a little bit better. Because you're buying options under 10 cents. You have to get under 10 cents. If you go too far out of the money and they're not under 10 cents, it's close to expiration here. You're really hoping with a pattern like this, it's a marginal pattern. It has some ability to lift volatility and to drop the market, but not a whole lot. So that's the thing to be concerned. The Qs a little bit weaker, maybe. So you can make a case for that. I'm still having to put my X-ray vision glasses on because I don't see it distinctly. It doesn't pop out and give me the ingredients that I want to see. So 509. Let's see, what 18 or 18 cents there, moved up to 62, 63, 68 cents maybe, and maybe 3 or 4 times your money. So it's a little iffy, but still a profit. Not to say that it's that iffy. And here's Russell 2000 and downside divergence. But see, it has downside divergence, had another one over here, had another one here. So as you get closer to the end of the day and it's still weaker, it presents an opportunity. That's true. But here you're at 20 minutes before the close and the index is sitting at 203.22. So if the 203s are cheap enough, then you have an opportunity. 203. They weren't that cheap. See, they were 20 cents. At 20 minutes before the close, no, I don't think so. I'm not going to risk my money on something that's 20 cents when the chances of it dropping dramatically are not that great, you know. So it went from 19 cents up to 67 cents. Okay, same thing, about triple, and it just ended up where it almost about doubled. So that's not worth the trouble that you go through to try to get something. If this were 2 or 3 cents, then I would say yes. But 20 cents, forget it. So that's all. Have a nice weekend.